right, good afternoon, everybody. This is Neil with Simple Futures. It is Thursday, April 27th. That means tomorrow is it. It's a wrap, if you can believe it. It feels like we just started April, but yet tomorrow is the wrap, the end of it. So we just got Amazon. You can see it went out about almost 110. It's been 122. It's 119 now, up 10 on a $7.80 expected move. It's pretty impressive. Tomorrow morning is PCE also. That's a big one. That is one of the Fed's go-to watch inflation measures, and so that matters. That does matter. I mean, that could be equally as disastrous tomorrow as was good today. Okay. So we've been, as you know, we've been in a range for a long time now, since April the 3rd, 4,100 by 4,200. The other day that was breached, yesterday I guess, that was breached to the downside a little bit. And then today, full recovery. I say full recovery because if you recall, we profiled the entire range for that entire range, high to low price for that entire range, date range from start to finish, and found balance acceptance on that entire range, high to low, and duration as being 41.53, half, 54, 53.4. Well, it came all the way back to exactly that today. Not only that, actually, even better than that, it actually traded through there a little bit and even went back and grabbed Monday's naked close and point of control, which was up at 59. So it closed that up too, meaning more impressive than simply just 53. All the way back to the weekly pivot, which was 64, which was Monday's high, which means another way of saying full recovery. I mean, full recovery. So that doesn't mean we're out of the woods. Tomorrow morning, I mean, one step to get out of the woods was to get past Amazon today, which it has. I just showed you the report there. And then tomorrow, the next step is going to be to get past PCE. So that, that matters. It really does. So what I did here was I marked from the low to high, which would be from yesterday's low to today's high, or the weekly low to the weekly high, since it's all the same. Incredible. And we see a couple of things here. One, we see that today's point of control went out near the highs with price. That's very important because until end of day today, that was all the way back down here at 4107, and that would not be healthy. That would not be good. You don't want to go out on the highs of a wide range on a price discovery day and leave balance back at the lows. That is a recipe for not good, i.e. potential disaster. So not good. So what we I think want to do, and that is pull this fib and get our retracement support levels as acceptable in terms of maximum allowable retracement and still holds good for higher. We know what target is higher. We were looking for targets higher before we got caught with this retracement that shook me out of some of my long stuff yesterday, disgracefully. I'm not happy about that, by the way, but and those are the 236 and 382 levels. So very first and foremost, that is 41.43, and then as a backup to that, 41.30, and I view it as pretty much simply as this: 41.30 is an absolute must hold. If it doesn't, then what we're probably looking at is a full-on assault of the today's lows, which would be a chart pattern setup that I call it anyway, an equal and opposite. And when one up day is followed by a perfect symmetry down day the next day, and it ends on the down day, that's equal and opposite bearish. If it were down one day and up, completely, perfectly, symmetrically reversing the bearish nature the next day, ending on bullish, well, that would be equal and opposite bullish. So that's a setup, that's not a trade. That's a swing setup, not a trade. So the setup would be the equal and opposite. If it did full on assault reverse all the way back to today's low, that would be the setup. Then Monday's breach of that low would trigger a brand spanking new short. And I got a feeling in that point, in that case, the low would definitely be a lower low than what we just experienced this week, and that low would be pretty darn close to 4,000, at least 40 and a quarter. Because if you remember, let me get it here on screen. Remember 40 and a quarter down here is balanced from January the 3rd through May 25th. So that's the bearish target, okay? And I don't want to be bearish, but I'm telling you that would be the bearish target. The path that I like is the path that I've been talking about, that that it appears we're mostly working towards. Absent some disastrous PCE tomorrow morning, I don't know, but that's why you have to make a plan for if then that, right? If holds the support tiers that I'm giving you, then remain bullish for that target. That target is, remember from before, we already had it in mind. It was 4204 and 19. 4204 would be T1 on the top, and as long as it holds this acceptable, super bullish retrace is 4143. Acceptable retrace is 4129, call it 30. That's perfectly acceptable. That's just simply a 382 retrace from the move, and that is absolutely still bullish. There's nothing wrong with that. That means, target 4204. And if the thing rolls and gets, which it doesn't look like right now, but there is news tomorrow, things can happen. So if it takes a turn for the worse, then the level that has to be support, and it's not. So then it's like, all right, then what? Well, then it's full on back to today's low, which would then, in the bearish case, that would equal and opposite. So then that's a setup, and you'd look for breach of that low Monday, which would tell you target on the bottom clearly at least 40 quarter, probably at that point maybe even 4,000, but at least 40 quarter. And that's fine if that happens, because that's really, honestly, that's not that big a deal. All it's doing at that point, it will look bearish for a minute, from here, but it's really all it's doing is it's pulling back and cleaning up the gap and the weak structure below, where we will still put on some long bullish trades for that 4,300 June target that, or at least I am. That's what I've got in mind. So, I say my job would be to say, here's what I'm doing and why I'm doing it, and there's the target, here's the risk, here, that type of thing. So, the only other thing I can tell you is remember that tomorrow being end of month, that means that you can't be surprised, even if it's up. You can't be surprised that the highs show themselves at about midday, 1 o'clock Central, and things kind of go sideways to a little lower from there. That's just normal on final day of the end of month. But that's getting a little kind of specific and granular. I don't know. We don't worry about being that tedious in looking at things here, but mostly we're in good shape. Mostly we just got a little test lower yesterday that's recovered all the way back to balance, and the weekly high and the weekly pivot and the whole for the reason on the top, and it puts us within striking distance of what our bullish target on the top has been anyway, and then we can say, okay, well, obviously we had that one little slip and fall back there at Thursday of last week, but in the end, it was okay. So, hope this helps. Good trade, nice evening. Let me know what you think. But I think we're making headway here. I'll be with you again here at first of next week.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me